Okay, let's unpack this. Imagine a company so foundational to modern technology that, well, without its machines, the most advanced computer chips just couldn't exist. Today, we're diving deep into ASML Holding N.V. It's a semiconductor equipment giant, and it's been making some big headlines, especially after, recent dip in its stock. Our goal here is pretty simple: get you quickly up to speed, well-informed about this pivotal player. We'll look at its recent performance, its financial health, and some of the conflicting views out there about its future.
That's right. We're basically sifting through a pretty comprehensive report on ASML today. We wanted to distill let's say, the most important nuggets of knowledge so you can really grasp what makes this company tick and its place in the market. And it's definitely a critical moment for ASML right now.
It really is. And what a moment. Just yesterday, ASML's stock price dropped, over 8%? Close at $754.45. So what does a sharp move like that actually mean for a company valued at nearly $300 billion? And, how does that stack up against its longer-term picture? Let's explore. Okay, first things first, for anyone maybe not familiar, let's get clear on who ASML is. The report basically says they develop, produce, market, sell, and service these really advanced semiconductor equipment systems for chip makers. Think of them as like the indispensable engineers behind the chips in your phone, your computer, even those complex AI systems, changing everything.
Yeah, and what's truly fascinating, I think, is their specialization. They're laser focused on lithography, metrology, inspection systems, specifically extreme ultraviolet lithography, EUV, and the even newer high-NA EUV systems. And these aren't just, any old machines. They are the absolute cutting-edge tools. You need them for the most advanced chips. Our sources actually give ASML a wide economic moat rating. That essentially means they have this really strong, sustainable, competitive edge. It creates an almost insurmountable barrier for competitors trying to get in. It's so profound that some analysts call China's reliance on ASML's EUV its biggest moat in tech.
That moat is key. And they're global too, right? Operating everywhere from Japan, South Korea to Europe, the U.S. And when you compare them to their peers, companies like Applied Materials, Lam Research, KLA Corp, ASML's market cap, that nearly $300 billion figure, it just stands way above them. Really underscores their unique spot.
Okay, so now we understand their crucial role. Let's shift gears and look at the engine driving this giant, the financials. What's the report telling us about their fiscal health? Well, the numbers certainly paint a compelling picture. If you look at the last 12 months, ASML brought in $30.71 billion in revenue and generated $8.7 billion in net income. That's pretty impressive. And if we connect that to valuation metrics, their PE ratio, the price to earnings on a trailing basis, is 28.8. The forward PE is around 24.91. So that suggests analysts are, expecting earnings to keep growing. Their price to free cash flow, PFCF, that's sitting at 27.07, shows what investors are paying for that cash flow.
And what about efficiency? Those numbers sound like they might be quite striking too.
Oh, absolutely. Their net profit margin is a really robust 28.33%, which is excellent. But maybe even more impactful is their return on equity, the ROE. It's at a staggering 52.08%. That figure really tells you how effectively ASML turns shareholder money into profit. It's a clear differentiator, especially compared to many in the industry.
Okay, that brings us to something crucial for any big tech player, especially one making massive machines. Cash. The report shows ASML generates a ton of cash, like $11.36 billion in operating cash flow and $9.29 billion in free cash flow over the last 12 months. Just pause on that nearly $9.3 billion in free cash. That's not just a number, right? It's like a strategic war chest. It gives them incredible flexibility, lets them keep pouring money into that cutting-edge R&D, which you just have to do in this game. And on top of that, their debt-to-equity ratio is remarkably low, 0.21. So a very healthy balance sheet with $5.42 billion in net cash.
And they also give back to shareholders. They have an annual dividend of $6.57 USD. That yields about 1.00%. And the payout ratio is pretty conservative, 28.49%. Again, just reinforcing that strong financial position.
Right. But, even with this incredible tech lead and these strong financials, ASML isn't immune to turbulence. We saw that recent stock drop. And the news around July 16th, headlines like ASML walked back its growth forecast or ASML sounds caution on 2026 outlook. That clearly signals some, significant investor anxiety.
So what's driving this disconnect? You've got strong fundamentals, but the market seems nervous.
Yeah, that's exactly where the sort of bull versus bear arguments come into play. It's quite a contrast. On the bull side, Analysts are really emphasizing ASML's dominant market position, that technological moat in the UV lithography we talked about. It gives them huge pricing power. They see a really strong long-term growth picture. They're projecting substantial revenues, maybe UR 44 to 60 billion by 2030, driven largely by this explosion in AI demanding more advanced chips, plus, successfully shipping the fifth NXE.5000 system, the upcoming NXE.520, that just keeps solidifying their tech lead, keeps demand going. Okay, that bull case sounds incredibly strong. Hard to argue with that dominance. But what are the bear analysts pointing to, especially after this recent dip? What are the worries?
Well, on the flip side, the bear arguments highlight significant geopolitical uncertainties, tariffs, restrictions. These are creating real headwinds. They could impact revenue, profitability, maybe even delay when customers place orders. There are also some concerns about adopting the next-gen high-NA tech. Is the technology fully mature? Will the transition be smooth? That's a question mark. And despite that undeniable long-term potential, some bears just look at the current valuation and think it's still pretty high, especially when you factor in these short-term bumps and, well, always present, even if distant, possibility of some competitor coming up with a disruptive technology.
It really is a fascinating split, isn't it? Immense tech leadership versus these immediate market jitters. The report shows our price target for ASML is $899.49. with a fair value estimate of $771.82. And that 52-week range is pretty wide high of $177.05 low of $578.51. The average analyst target over the last 6 months is sitting right around $800.
Yeah, and it's really important to understand the context of their Q2 earnings, the ones released July 16th. They actually reported strong numbers, $7.7 billion in net sales, $2.3 billion net income. And for the full year 2025, they're still expecting about 15% sales growth, gross margin around 52%, so not bad at all. However, the market reaction, it really seems to be focused on those warnings about 2026 growth, the suggestion that sales might just be flat next year. It looks like it was that forward-looking caution rather than the current quarter's strength that spooked investors and maybe prompted the sell-off.
So wrapping this up, what does this all mean for you, the listener? Whether you're an investor or just trying to understand the tech landscape, we've unpacked ASML, a company right at the bleeding edge of chip tech, facing this incredible long-term demand, especially from AI, but also dealing with immediate headwinds, geopolitical stuff, and this kind of cloudy outlook for 2026 they mentioned.
Right. So the critical question becomes, when you look at a company like ASML with such a strong moat, but also this clear vulnerability to external factors,
Yep.
where do you see the biggest opportunity or perhaps the biggest risk for someone investing long term? It really boils down to weighing that undeniable, enduring tech leadership against these more immediate, perhaps temporary anxieties and headwinds.
We really hope this deep dive gave you a fast track to being truly well-informed about ASML. And hey, if you found this concentrated dose of insight valuable and you want more focused analyses like this one, please make sure you subscribe to our channel and definitely hit that bell icon so you don't miss the next deep dive. Your support really helps us keep bringing you these focused analyses on the topics that matter.